Do you think that cryptocurrencies will potentially see their end?
No, I don't.
Some of these technologies, by their very nature, are quite provocative to the status quo.
Everywhere we look, probably around every use case, there's at least 30% of process inefficiency.
Now more than 90% of the top 50 global banks are doing at least one experiment in blockchain in trade finance.
Welcome to Sibos 2019. Since its inception 41 years ago, this has become the premier financial services event of the world, featuring more than 11,000 delegates, 600 speakers, and 300 exhibitors from all over the globe. Hosted by financial payments powerhouse Swift, this conference is pretty much a banker's paradise. Over the course of 2 days, we managed to sit down with 11 experts from some of the most prominent financial institutions, consulting firms, research groups, fintech developers, and open source ledgers in the game today, including IBM, Accenture, McKinsey Company, ANZ, Hyperledger, Fnality, Synechron, and Everest Group. And yet, despite being inside the belly of the beast, we found that blockchain was still on the tip of everyone's tongue, and not for the reasons you might think.
We're here at Sibos. I'm with Jason Kelly from IBM. Could you please just tell me a little bit about what you're doing here, why you're here, and what you're doing at IBM?
All right, so first we're at Sibos, one of the premier banking conferences in the world. IBM has a history, have a deep history in banking. However, I'm here as the blockchain general manager for IBM. And general manager of blockchain means that we, as a blockchain company that is also a cloud company, that is also a services company, that is also a convener of network company. We're here to talk to clients, get them understanding that blockchain isn't just a big, bright, shiny thing that's this B word, but instead, it's a true capability that's helping to transform this industry along with others.
Why is it a true capability?
People tend to say blockchain and they think crypto. Oh, wow, yeah, it's a crypto thing. Well, that goes way back. This is not crypto. Now, blockchain is under that. It's the capability under that, and that's what we focus on. What's a true outcome of blockchain so that you get these things that you've been chasing in your enterprise that are focused on one thing only at the center, and that's data. And that's what's been elusive. They say, well, this blockchain thing, what is it? It's just driving clarity around two things, and that's having trusted permission access to data, and once you get to that data, you know it's right. So think about you as a supplier, perhaps. If you're a producer or supplier, there's a supply chain there. Right now, you have many steps along a supply chain with a consumer being at the end of that. Think if you have trusted shared access, you don't have to make phone calls, look at emails, and check and see where something is in the supply chain. You could all have access, trusted access, by just looking at it. And then when you saw that data and you had access, you'd know it was right. That's what blockchain is delivering as a capability on the forefront. Then we think about all of the extra. Guess what else depends on data? IoT. So the Internet of Things. If you're trying to make sure that that device is that device and it's saying how something's going through a process, it's using data as well. AI also is using data. Automation using data. All of these things are now being empowered by this new catalyst of capability, which is blockchain.
Hold on a minute. Let's take a step back. This doesn't sound like the blockchain we were used to talking about. What exactly are we dealing with here?
Let's take one of the use cases for blockchain for companies or for permissioned networks. And the idea for permission networks is that there are a number of companies, let's say, that want to create some network together. Let's say supply chain, logistics, trade finance, or banks that just want to do the cross-border payments in the more efficient way. And they create a blockchain network where they will put transactions and they will transparent to everyone, and every transaction will go in based on agreement between the parties. So let's decide we need at least 2 out of 10 participants to agree on transactions in order for the transaction to be added to the ledger.
When people hear blockchain, they tend to think of the two most common consensus algorithms associated with cryptocurrencies, proof of work and proof of stake. These are mostly used for public or permissionless networks, where transaction validators don't need permission from anyone to verify transactions, just the proper tools. Here at Sibos, we are going to take a closer look at the other side of blockchain to see how modern companies are integrating permissioned or private blockchain networks into their infrastructures. So first, let's gain an understanding about where and how this technology can actually be applied.
I'm Ronak Doshi. I'm Vice President with Everest Group. So we are a boutique research and advisory firm focused on the global services industry. One of the key research areas for me is blockchain. So we are seeing 4 types of key use cases. The first one is what I call as alpha in the room. Now, in alpha in the room, what happens is you have a single entity which has disproportionate power and can get other entities in the room together. It could be a regulator. It could be the firm which has the maximum market share in that area, or it's a vendor relationship where the buyer has more power, like say a Walmart, like a bigger giant, can control all its vendors and can dictate the terms. That's where the alpha in the room construct is. This is where we have seen the maximum networks forming, because you have a single entity who's trying to drive this agenda of blockchain adoption and trying to create better processes and kind of driving efficiencies. The second area is the bottom line collaborators. The bottom line collaborators are trying to reduce the cost of doing the business or the process by coming together. This is where you would see areas such as trade finance, areas such as digital identity or provenance, or seeing the entire supply chain financing. All of these, or international payments and settlements, these are key areas where you're seeing this happening. The third category is what we would call as, think of it as disintermediation avoiders. The disintermediation avoiders are central agencies who are doing settlements, are the ones who are doing corporate action processing, and they are the ones who now are in threat of getting disintermediated because of technology. But the beauty of this is a lot of these guys, if you look at the Australian Stock Exchange, and a lot of these market intermediaries have already started their blockchain journey. So they are now thinking of blockchain as an enabler for their business, so that they can protect their business, but at the same time create newer value-added streams of work. So create newer revenue streams or newer value for their customers so that they can retain that business. And the fourth category is what I would call as the disruption category, which is more like the examples of cryptocurrencies and Bitcoin and all of these guys who are coming together and creating newer ways of working, like the peer-to-peer and marketplaces and that. So in all of these situations, you need ecosystems or networks to get created. The purpose is different. It could be cost in some cases, it could be disintermediation avoidance in some cases. In some cases, it's about creating newer values or business models. So we are seeing signs of all of this happening.
Let's put that in some context. What would blockchain technology look like if it was applied to a real-life system?
Well, we've been fascinated by it ever since the emergence of Bitcoin, and we took a deep dive into that. And that's where we kind of started realizing the data reconciliation properties of blockchain. Subsequent to that, we got challenged domestically in Australia by some large property companies who were asking us to solve a big problem. Banks have been issuing paper to their clients for a long time, for decades. These companies, large landlords, came to us and said, you've got to stop that. So we decided that we would look to digitize and standardize the product, but we also would try to select the appropriate technology to support a network of users who are competitors, to a number of actors who are either applicants or beneficiaries, and without creating a large central capability or function. Now, unsurprisingly, blockchain presented itself as a really interesting opportunity. So we leveraged the IBM blockchain platform, which is a Hyperledger-based code, to deliver a platform where we could digitize, standardize guarantees, put it on that platform, and give our large beneficiary customers, landlords in this case, a substantial uplift in their experience for guarantees, paper to digital, standardization, security, and quite a significant amount of workflow. It does enable all of those great benefits, that reduction in friction, dramatic change in life cycle time, and also the workflow that we generated through the UI that sat on the blockchain.
So this was a key example of how blockchain was integrated by a large bank to digitize and improve the efficiency of an existing system. So let's think about this on a larger scale. If this is just one example of a process being streamlined through blockchain, what kind of impact would this have across an entire industry? Is the impact quantifiable?
Everywhere we look, probably around every use case, there's at least 30% of process inefficiency. And just about everybody in the ecosystem. The idea is you get to frictionless processing, right? Every piece of friction in that process today causes delays, right? So it causes either delays in people, time, or money. And so goods sitting in a port that can't be released until they can confirm that the funds were exchanged hands. Like, that's time in your inventory, right? You're paying for inventory that's sitting idle. Your working capital capability, right? That gives you the ability to faster get to that working capital so you can spend it on the right things, right? And you think of the ability to look across that data and have different triggers you can do now, depending on who you are in the ecosystem, right? If you've got goods that you now know the location of and you're an insurer, you might want to offer insurance as there's a weather event coming across the ocean. There's all kinds of new services that people can make. So there's cost savings, which are exciting, right? 30% cost savings or more is fantastic, but it's I can do new things, right? I can offer new products and services, and new people are going to start to enter the market as they have access to that information.
This all sounds great, but is it as revolutionary as it sounds? Is blockchain technology truly applicable to these kinds of situations?
Blockchain technology favors the crypto use case far more. It is built for that reason, and the banking sector is trying to sort of shimmy it to make it work for their needs and their operational challenges. And that's a bit unproven yet, whether that's going to work, but I think certainly the technology is a unique way to achieve that censorship-resistant currency story.
What is the case in which banks could actually recognize the potential of this technology and use it in a way that isn't just shoehorned into the existing infrastructure?
I think the discussion that utility settlement coin and Fnality are pushing is a really interesting story. That is potentially a unique way that blockchain can unlock the fact that today the financial system requires banks to lock up capital in a very crude way. Basically, every bank has a bank account with each other and stores cash there. And so the Fnality story is a promise to unlock all that money that's stuck in bank accounts for interbank transfers, and that'll be an enormous cost saving.
Can we break that down a little bit? So you're using something that's called the utility settlement coin. Utility settlement coin. So what exactly is that?
So the core idea is that we can represent a cash asset digitally on a shared ledger, a blockchain, where the actual cash represented by the digital claim is held on deposit in a central bank with some of the characteristics of central bank money. Things like free from counterparty risk, free from credit risk, settlement finality, which is actually where the name Fnality comes from, for Fnality International. The idea is, however, that even though the digital claim would have some of the characteristics of central bank money, it's not actually central bank money itself. It's a very unique form of commercial bank money. It's really designed for wholesale settlement between financial institutions. And it's designed to be multi-currency in that it wouldn't just be one claim sitting on one ledger, but it will ultimately be claims against different currencies, pounds, euros, dollars, Canadian dollars, Japanese yen, etc., on different ledgers.
Okay, so what is the main impact of this coin on the companies using it themselves?
So longer term, it's really about automation and efficiency, which seems to be the story in financial markets for the last 50 years. The idea is that at some point in the near future, we will have a multi-currency clearing and settling system for wholesale purposes that runs 24/7, 365, could substantially reduce operational risk, reduce capital consumption because of the change in the amount of, let's say, risk-rated assets that need to be allocated against the cash that banks currently use to fund their payments activities across the world. It's a big vision. It's something that is going to take some time to realize at scale, but we're on the path.
So we've been talking to a lot of different people over these past couple of days, and one thing that is on their mind is blockchain. We've talked to banks, consulting firms, and fintech companies, and all of them are doing research or looking to pilot or implement blockchain technology. A year ago, everyone was talking about cryptocurrencies, but now everyone seems to be talking about blockchain technology.
And what about other projects outside of the banking sector? How is blockchain revolutionizing the way other systems work?
My name is Marta Gieter-Piekarska. I'm Director of Ecosystem for Hyperledger. So Hyperledger is an open source project within the Linux Foundation. So we are non-profit, hosted by one of the bigger non-profit in technologies in the world. We've started 3 years ago. As an answer to what can enterprises and the business community do with blockchain. So not really the Bitcoin side of things, open, public, permissionless blockchains, more the permissioned public or private blockchain technologies. We are still a bit in a phase of kind of throwing spaghetti to the wall and seeing what sticks. So this is changing. We are getting more and more focused. All industries are getting more focused, understanding that blockchain won't solve it all, and it's all about the bigger picture and the bigger solution. So I think that in trade finance, in a supply chain, we'll see more blockchain stuff for kind of tracking the provenance, the blockchain being integrated in the full supply chain from the farmer all the way to the consumer, connecting consumer and farmers, so that I know that it's Joe the farmer that grows my coffee and not some random person that I have no connection to. So it's more kind of a personalized experience for the users. In terms of other projects, I think identity will be becoming more and more interesting. Actually, Accenture has a very interesting demo of something that is called known traveler identity, which creates a seamless identity kind of based system for traveling.
My name is Dave Treat. I lead Accenture's blockchain business globally, along with a guy named Simon Whitehouse. I've been in the space, I've been leading this business now for the past 4 years, building it up from where it existed in Accenture Labs as a pure R&D project for the few years before that. But I've been in the blockchain space for close to 6.5 years now.
So what's the most interesting thing that Accenture is working on at the moment?
We have three focal areas, really, where we're putting the majority of our investment. It's financial services infrastructure, digital identity, and supply chain, both physical and digital. And really, oftentimes, all three of those come together. But being here in Sibos, financial services infrastructure and digital identity are, of course, key. On the digital identity, the importance of that is really a core foundational capability that involves multiple innovative technology spaces, not just blockchain. It's blockchain plus biometrics. It's all about the linkage between the physical and the digital world. The winning digital business today wins by accumulating as much data as they possibly can, and then feeding it into their AI machine learning algorithms and generating marketing insights and the rest. But we have no control. What the first foundational thing that this new combination of technologies creates is that for the first time ever, I can encode three core things. I can encode the intent, the rights, and the obligations of the data as I share it with you. So the intent, I want you to have this piece of data. I'm going to cryptographically sign it, I want you to have it. You then store it, and you're storing it with a set of rights that I've given you as to what you can do with it, and this is all codified in the data, and then a set of obligations that you owe back to me. So this is the control aspect of suddenly through the cryptography, through this notion of user-controlled digital identity, I can take those specific pieces of data elements and I can intentionally share them with you for specific purposes. Importantly, we've also created, as a community, the ability for me to revoke it. I can say, I only want you to have it for 10 minutes, or I want you to have it until I tell you that I no longer want you to have it, and I can pull it back. We've never had that ability before. So we have this notion of me having a personal data store that's my digital identity wallet, that I accumulate my passport information, my driver's license, my medical information, work credentials, etc. And I now have this data of attested information from service providers and authorities. The interesting thing that there is, of course, you have to directly link the digital world to the physical world, and so biometrics is the way to do that, right? Whether it's face or iris or fingerprint or DNA at some point, it's the whole notion of linking that physical and digital world, and so The pattern is I have a personal data store, I'm able to intentionally share that data with others, I'm able to have control over it, and I'm encoded as into some of those attestations are biometrics attestations, so that then someone can verify that yes, that digital information belongs to that human.
Reclaiming my identity, right?
Yes, exactly.
So what are the actual use cases for this technology?
So one of the ones we're most proud of and is closest to production implementation is work that we're doing with the countries of country of Canada, the Kingdom of Netherlands, Schiphol Airport, Toronto Montreal Airport, KLM Airlines, and Air Canada as a starting group of an ecosystem that's looking at the massive problem of the travel industry's growth. We're set to, I think, close to double the amount of travelers in the next 10 years. The current infrastructure just won't be able to support it. And so the whole notion is, with this self-managed user-managed digital identity, I can take that attested information and share my details ahead of time intentionally with those that I'm going to interact with on my trip. They can pre-certify and pre-clear me, and then it doesn't have to be a surprise when I show up at immigration and pan my passport over. They shouldn't be surprised to see me. Instead, I booked my ticket hours at a minimum, but days, weeks, months ago. They should know I was coming. They have me in context. That we can use facial recognition technology. I just walk right through. So that's kind of a base case, but build from there, right? I share that information with my hotel, the car services, the restaurants I want to attend, to go to. I'm sharing the pieces that I want to choose to share with all the players that I want to have provide me hyper-personalized services in a very controlled, private, secure, revocable manner. Suddenly I can create an end-to-end traveler experience around my own management of my own digital identity information.
So I won't have to wait for 2 hours at the airport anymore. I could just
Exactly.
walk straight through.
Or if you're attending a giant conference and there's a long queue at the long queue to get in, maybe you just walk right through because
That's
you pre-registered, and through facial recognition you just you're in.
These sound like some great ideas, but why haven't we seen anything come to fruition yet? What are the hangups?
What is holding blockchain back from being fully integrated? Is there anything?
So first of all, I would say there is still an element of the cost of the technology per se on different elements. Acquiring the right capabilities, developing the technology, the computational power that is needed for some, let me say, of the chains. This is still something that I think from a technology perspective needs to be matured. The second element, which I believe is a bit of a roadblock, is the lack of standardization, right? So, I mean, the banking sector has always pushed for interoperable standards at global level or at domestic level. In the absence of a standard, it's different for banks to communicate in each other. And given the distributed nature of blockchain and the fact that multiple actors need to interact on the same network, this could be actually a huge challenge. The third element which I will mention is the fact that some of the blockchain technology that we've seen, for instance, for coins, were intrinsically not fit for purpose for financial services application at scale. So, for instance, now we see a clear trend of financial players investing into private, permissioned chains, while the very first one were public and permissionless, right? So, I mean, this is part of the evolution of the technology that is undergoing, and there has been also an investment from the financial community in this respect, and probably this might be overcome, let me say, in the next few months.
So with all this talk about mainstream blockchain adoption, where does that leave crypto?
So what is your overall opinion on cryptocurrencies, specifically cryptocurrencies like Bitcoin, ones that are meant to challenge the centralized infrastructure that we see today?
I think they've been a tremendous catalyst for change within banking. I think they're fascinating because of the way they've just emerged from nowhere. And there's way too many altcoins out there right now to even understand what everyone's for. There are some emerging technologies that are much more centered around enterprise use cases, which are starting to show some promise. But I think cryptocurrencies they will always have a place at the periphery of our economy.
So you don't see a place for something like Bitcoin in the mainstream in the future?
No, because I think it doesn't have the properties that are attractive for high-speed transmission of value. It's too slow, right? The TPS is way too low, 7 TPS or 10 TPS versus the MasterCard Visa network, which is 20 or 30,000 TPS. It's not fit for purpose for mainstream adoption because of that. I think its governance is difficult for us to support, or lack thereof, I should say. And the regulators, you have to ask them, but I get the impression that the door is open for a set of digital assets to emerge in our economy. But for those, I guess, digital coin 1.0, I think they'll have their place in history, but they have to evolve. If they don't evolve and become more customer friendly, faster, more secure, and more transparent, then there'll be other coins that emerge, private or perhaps central bank issued, that will overtake them because they'll just have better features and capability.
So, do you think that cryptocurrencies will potentially see their end?
No, I don't. So bankers don't love volatility and our customers don't like volatility, but we didn't lose sight of the fact that those currencies, be they as volatile as they were at the time, and they're much more stable now, they nailed the clearing and settlement problem that bankers have. So my intuition said that if we can get a stable coin, and you see much more talk about stable coins now, including Libra, for example, that can deliver the properties of a cryptocurrency which synchronizes clearing and settlement, you can transform the payments process beyond any reasonable expectation that correspondent banking might traditionally attempt to do. So you've got to take the right features and capability out of the wild cryptocurrencies, if you like, put them into a more regulated framing, but at the same time not losing those really important features that say instant transmission, synchronized clearing and settlement, and ideally a really strong digital wallet experience for a customer.
Through the advent of cryptocurrencies, the world seems to be finally taking blockchain technology seriously. But as we look to the future, will blockchain remain on the forefront of innovation in the financial world?
How do you see the relevance of blockchain technology in the future? Do you think it's this big technological revolution that people are saying, like comparing it to the internet and those things like that?
I think it's an interesting thing. The true success of it will be when it becomes invisible, actually. So I think we won't be talking about blockchain or DLT technologies when it's already is part of sort of the day-to-day life that we have. So I think that's the ultimate test. I sort of say that, but at the end, we don't really talk about some of the technologies anymore that have transformed our lives as much. So I think the true success of it will be when we don't talk about it anymore and it's embedded everywhere, and we just accept it as it is.
This has been Sibos 2019, where I've talked to some of the biggest names in finance. And if there's one thing I've learned from all of this, it's that blockchain technology is here to stay. I'm Jackson with Cointelegraph, and I'll see you down the road. Adios, amigos.
Cointelegraph. Like, subscribe, and hodl.